The value and buying power of our currencies is under threat. Inflation is something to definitely be concerned about. And you've only got to look at the markets in this week to see that it is not just the stacking community that is concerned about inflation. Big financial institutions are also scared of what is to come with relation to buying power of dollars, pounds, yen, whatever currency it might be. So today we're going to have a good thought-provoking chat about inflation and how it relates to gold, and why I still think that gold is one of the only surefire methods to protect your wealth over time. Hello everybody, Backyard Bullion here, and a very warm welcome to you all joining me for this week's Precious Metal Rambling, which is going to be all about inflation and its relationship to gold, silver and precious metals generally, and how it influences my thoughts, feelings and emotions towards buying and also holding on to my gold and silver for a long period of time. Now, as I have done many times before, I'd like to point out that I am not a qualified financial planner. I am just a guy who likes to talk about shiny things here on YouTube. So any financial decisions that you make today are yours and yours alone. And I'd highly recommend that you go and do a lot more research or speak to a qualified financial expert if you're concerned about what is right for your cash. Inflation is a big topic right now, though. It is the topic that I am most concerned about for the world of fiat currency, the world that we live in. Everybody needs fiat currency, whether you love it or loathe it. It is the way the world works. And I personally am most concerned about the future of fiat currencies because of the rising prices of just general everyday commodities. We'll talk in today's video about lumber prices going up. There's a lot of people who've said lumber's the new gold. You should stack lumber. What I am concerned about is, of course, inflation over time, but I am not concerned necessarily about hyperinflation. There's a lot of rhetoric out there at the moment about the potential for the dollar to completely fail, and all of these indicators are such that the dollar will completely fail over time because of these hyperinflation prices we're seeing on things like lumber and other commodities out there. I'm not a subscriber to that idea that anytime soon the dollar will completely collapse, but I am concerned about inflation. And of course, I could be wrong. Everybody in this world could be wrong, including those that are calling for hyperinflation for the dollar. You know, they are buying lots and lots of gold and silver. They want it almost to collapse. I'm not a fan of that rhetoric, but I will admit that there is a concern in the back of my mind, a small one, that could happen. Now, why I don't think that hyperinflation is likely is simply because right now we are in this world where the whole supply chain of the entire world almost is completely messed up. It is completely off kilter with how it normally has been. And as such, that has created this market almost of inflated inflation, I guess is what I'm calling it. So there's a lot of price indexes right now which are a lot higher than they will be perhaps when markets start opening up again, when supply chains really start kicking into their old ways of working. And, you know, for example, lumber. There is not a shortage of lumber. A lot of the lumber that would be entering production this year for building and whatever it might be, that's already been grown. That has been put aside 20, 30, 40, 50 years ago by forestries. You know, that lumber is there. It is just not being able to be farmed and produced and manufactured. So there's no shortage of lumber. What there is, though, is a shortage of the ability to get it to the marketplace. And that is most certainly a big concern, but that is a supply chain issue rather than an indication that everything on this planet is tripling in value because of the devaluation of the dollar. Now, 100% the devaluation of the dollar has happened, and you've only got to look at the data for this last year to see that nearly a quarter of all the dollars that have ever been printed were done so in this last year to basically combat the whole coronavirus pandemic. And the same can be said for a lot of different countries around the world. They have just plowed cash into their systems. Money printers go brrr. That is what one of my favorite phrases, but that is unfortunately the sad truth of the matter, and that concerns me about the valuation of our currencies going forward into the future, and is that essentially we have printed all of this cash, all of this money, and the value and the buying power of that cash will most certainly go down. And that is what fuels my own personal reasons for buying gold and silver. I view these as a stay rich quick scheme rather than a get rich quick scheme. One thing that I have said continually is that if you get the $1,000 an ounce silver or $10,000 an ounce gold, that a lot of people think is coming because of inflationary woes and inflationary concerns, that unfortunately, if you trade that back up for that fiat currency to buy a house or buy your groceries or buy a car, those things that you're buying will have also been inflated in price, and it will be $200 for a loaf of bread, or $50,000 for a bog standard car, or your $500,000 house will suddenly cost $1 million or more, or 500 million, $5 million. There's this disconnect between thinking that $1,000 an ounce silver means you're a millionaire. It's not necessarily how it's going to work. It depends entirely on what currency you're buying your gold and silver in for, of course, as well, because if the dollar does collapse, it's certainly going to have an influence around the world, but whether it'll still be the same for us who stack in pounds and buy in pounds, and what influence that will have on us. If the pound stays strong but the dollar collapses, there's a very good chance that gold will naturally rise as many people flock to it, and that'll of course mean that we in the United Kingdom and other countries around the world could actually see some really big tangible gains in relation to the buying power of our currencies. Again, this is a hypothesis. I don't really quite know how that situation would work. Personally, I'm feeling that if the dollar completely collapses, the world will see some very significant issues beyond the valuation of its fiat currencies. I really don't think that we would survive economically in the United Kingdom if the biggest economy in the world, the dollar, collapsed. I feel like inherent trust and faith in fiat currencies around the world would go away as it is growing more and more. You see only right now that people are flocking to assets, to gold and silver. The whole new Wallstreetsilver movement is fueling this new generation of people who are waking up to the idea that their currencies are not going to be worth the same over time. Inflation, whether it be hyperinflation or not, is something that happens year on year. And in fact, governments will often target a certain rate of inflation of, say, 2% or 3%. And that really does fuel the devaluation of currency over time. If you lose 2% of your currency every year, after 20 years, you're going to have a significantly less amount of buying power. And you've really only got to look in history back into the sort of 60s and 70s of what a dollar could buy you then, what a pound could buy you then, and what it does now to really see that. And gold and silver are a way to transport that wealth through time. And that is one of the reasons why I buy gold and silver, to hedge. But I don't believe in, and I don't subscribe to the idea of going all in on gold and silver because of the imminent collapse in the dollar or the pound. And one of the really interesting relationships between inflation and gold is its tangential, is that the right word? Tangential relationship with interest rates. Now, we saw last week there was a little blip from Janet Yellen who mentioned about inflation and its control by inflation rates, hinting that at some point interest rates would have to increase again. And that fuels drops in the value of gold and silver because it's more incentivized for savers, for people with money in the bank, to put that money into things that actually give a monetary yield. So interest rates, if they go up to 3%, 4%, 5%, put it in a bank, earn money on it every year. If you've got the cash, that's great. Put money into gold and silver. It doesn't earn you money every year. It just sits there and holds its value over time relative to the buying power of your currency. So when interest rates go up, it's very, very common that gold and silver prices go down as investors take money out of the gold and silver that they've been keeping safe and put it into things that will actually yield the money. And because inflation is very much about spending, it's of course, the more people buy things, the more demand there is for things, the less supply there is on the market, and therefore the price goes up for items. We'll take lumber as the prime example. Right now it's compounded by the fact that we have got supply chain issues, but because interest rates are so low right now, there's an incentive out there for people to borrow money to build houses, for stimulation of building industry. People want to build. People want to borrow money to build because it's so cheap. There has never been a cheaper time in this last 50 years to borrow money. It is just, hand over fist. So that is countered when when interest rates go up to try and control inflation, because it means that people are less likely to borrow to build. People are less likely to take out more money on their credit cards to do a decking in their back garden or something. So less people buy stuff on the market, which then, of course, means there's more supply, which then means that prices come down because there's a lot more to choose from and people have to be more competitive. And of course, if you combine that with the reopening of supply chains and economies around the world, that is going to have a big drastic effect on, for example, lumber prices. We're talking about lumber for the moment. So right now, lumber is massively inflated, and people use that as a excuse to say that the dollar is starting to fail. It is that slippery slope down. But I don't view it that way. Now, I'm not an economist. I don't have any kind of economic academic background, so I can't talk really about economic theory. But just from my basic understanding of how this sort of economy style system might work, supply and demand, that seems logical to me, that right now supply chains are affected and there is this huge demand for new products, new building, because of the low borrowing rates that are out there. If inflation becomes more of a concern and interest rates are increased to combat it, I can see those lumber prices coming down. So it's very interesting to think about inflation where we are now. I'm filming this video on a Tuesday morning on a week where there's data coming out about the US inflation rate, which is tipped to be, I'm, as I said, filming this ahead of time, so it's tipped to be 3.6% compared to 0.2% last year. That's a big jump. That is a big jump, but it's less of a jump than I think that some people were potentially looking at. Now, of course, how you interpret data is going to be very interesting, but I almost can guarantee that, for example, lumber prices were not included in those kind of calculations because they really are inflated inflation, if that makes sense. It's not true inflation. It's more supply chain demand and supply style questions and concerns about that. The real things which are at stake here, though, is the value of our currencies over time, the dollar, the pound. And I have no doubt that whilst lumber prices will come down at some point in the future, and interest rates might go up, and the value of gold and silver in the short term might go down. That, in my opinion, would be a great thing because it would mean more buying opportunities for buying this stuff here and preserving that wealth. Because despite everything I've said about what I think the US government calls it transitory inflation, or the sort of controlling of inflation in the short term, I do still have major concerns going into the future about the value of currencies, about its ability to still purchase the same amount of stuff. And I cannot see how, with the amount of money printing that's gone on over this last year to combat the coronavirus, that there will be safety in fiat currency going forward. Now, the truth of the matter is, though, that we still need fiat currency in this world, and there's been talk about what could replace it. The dollar is on this downward spiral, if you would believe a lot of the doomsday sayers out there, that there will be a complete collapse in the dollar at some point. And what will replace it? A lot of people think cryptocurrencies will replace it, or a government-backed cryptocurrency. But unfortunately, I don't think that is something that's likely. I think cryptocurrencies are very unlikely to ever be a 100% currency monetary base for any country out there, for the plain and simple reason of it is very dependent and reliant on power, on internet connections, on transaction connections through different peer-to-peer networks. What if there's a hurricane? What if there's a disaster, natural disaster? What if the power goes out? What if there's a cyber attack like we saw this week on the oil pipelines? What if there's a cyber attack on the servers that communicate with everywhere? In those situations, people need a means by which to actually use money, to buy services, buy goods, buy things they need. And so a sort of movement completely to cryptocurrencies is, in my book, something that is not possible or practical with the technology we have now. It is fallible. It is not infallible by any stretch. And that goes for the same for gold and silver as well. I don't see gold and silver ever becoming the complete currency dependence for any country. It is cumbersome. It is difficult to move gold and silver around. If you're going to go and buy, if gold and silver is literally the only thing, if digital currencies are a thing of the past and gold and silver is the only thing that we look at, going and buying a house with gold is going to be difficult. So, of course, you're going to have banks. You're going to have a bank account. Whether it's backed fully by gold or not, that's a topic for another time. Gold standards are a thing of the past, and they're an impractical means by which to run an economy. So a lot of economists would have you believe. There are, of course, pros and cons to both sides of the argument. So that's a video for another time. But the premise that gold and silver will be completely, they'll be the things that we all rely on. And if we get to a point where that is required. You'll have, banknotes which, like the gold backs, are, they'll have a fraction of an ounce of gold, tens of thousands of an ounce of gold. Like a Bitcoin is now, you have however many decimal places it is for value. Gold and silver could end up being like that. I'll grant you that, but I personally can't see that ever happening. And ultimately, this is the parting message which I'll give you. Fiat currency, money, cash, what we use on an everyday basis. I'm just going to chat. I think I've got some in my wallet. Yes, I've got a £5 note here. This is a promissory note, and you've just got to look at what's written at the top here. I promise to pay the bearer on demand the sum of pounds, £5. We hold faith in this piece of paper being worth £5, that if we give it to somebody else for something, a sandwich or whatever it might be, they will then be able to take that money and they'll be able to buy something that they might need. They might need some medicine. They might need, or whatever it might be. They might need a drink just to keep themselves alive. That is what we put faith in. That, currency, a piece of paper. That's just made of paper, or plastic as it is now. This is exactly the same. There is absolutely no difference between this and that, other than this is made of gold. We still put value on this as a species. It is just the thing that we have chosen to put value on because it's convenient. It stays the same over time. It seems to be something that we can transport through time. Gold has been used by kings, queens, and empires to pass on value and wealth over history. That's the thing that we've chosen to stock our value in. It makes no difference what we do it with, in my opinion. That's just an interesting argument for another time. It's absolutely no different. It's just metal at the end of the day. You can't eat it. You can't keep yourself warm with it. It is just a thing that we put value on. And what other things do we put value on? Pieces of paper with numbers written on them. So that's my thoughts. A lot of interesting things to talk about, I have no doubt. And if you have enjoyed this video, then please let YouTube know, and me as well, by putting that thumbs up button on there. And if you're not subscribed, make sure you hit that subscribe button, because if you have enjoyed this video, there's a good chance that you'll enjoy some of the other videos that we make and have made as well. So go and check them out. Links are down in the description below to playlists. Otherwise, a big thank you to you all for watching. Let me know your thoughts down in the comment section on inflation, your concerns, or whether you're not concerned about inflation. Do you think it is something that is not going to hyperinflate away? Are we going to continue on as we are in blissful ignorance of the devaluation of our currencies over time? It'd be great to hear from you. Otherwise, have a great week ahead. We'll see you on the next one. Thanks for watching. And as always, please make sure that you like, share, comment, and subscribe for more.